Some big-name bargain hunters are looking south of the border for a value play in the currency market. Sara Eisen has a little bit more. So, Sara, you're taking a look at the Mexican peso.
That's right. It used to be the currency that everybody loved to hate. Now some analysts are learning to love Mexico's peso. This week, Fitch downgraded Mexico's credit rating to BBB, second lowest investment grade. Analysts and investors were expecting that move. It is the latest in a long string of bad news for the Mexican peso, from disappointing growth numbers to political and fiscal uncertainty to swine flu. All of this leaving Mexico's peso very cheap. How cheap? Well, PIMCO says it is one of the cheapest currencies in emerging markets, and it could rise as much as 20% against the dollar over the next year. Credit Suisse says it's an attractive carry trade bet thanks to its relatively high yield, higher interest rate. And Bank of America, Merrill Lynch, is upping its forecast. Any way you slice it, Mexico's peso looks very cheap.
So how does it compare, though, to maybe some of the other LATAM currencies?
Well, you can see it is the underperformer in the region. Brazilian real, the best performer in the entire world of the major currencies so far this year, up 34%. Chile's peso rising about 29%. Colombia's peso rising 14%. So you can really see how much it's lagged. Also, an interesting comparison would be to Canada, which is the other economy that is very tightly linked to the U.S. economy, both Mexico and Canada. Mexico relies on the U.S. for 80% of its exports.
Thanks very much, Sara Eisen, there on the Mexican peso.